Home insurance in Big Stone Gap, Virginia. When you're sitting at home worrying about the mounting pile of bills to pay, it's easy to lose sight of the big picture. Fact is, just as you're in a new world of hurt, there are other people hurting as well. In this case, the people are the inventors in the insurance industry. They all bought shares in these big corporations when the prices were high, never thinking that the world could suddenly turn sour. Although it's a mutual insurance company, let's take State Farm as an example of what's happening across the industry. This is one of the biggest insurance companies in the U.S., and it's just turned in an operating loss of $542 million for 2008. Its net worth just dropped a whole 16%. Now you have to understand, this company did not get caught up in mortgages of any prime. There were no securities theses or derivative that's. This company has just been caught in the general collapse of stock exchange values. To understand, we need to look at how insurance companies work. They charge most policyholders with a vehicle or a home a monthly premium. This brings in a small mountain of cash every month. That money is invested until it's needed to pay out on claims. Some goes into fixed income products. The rest goes into shares. As you may have noticed, the Dow and other stock exchange indexes have been in free fall. The result is that State Farm has lost the capital value of the investments and in many cases no longer receives any income as interest or dividends. This might have been manageable except for this little thing called global warming that no one believes causes hurricanes and other weather catastrophes. The last 2 years have seen a big increase in weather damage claims. Put the loss of investment income and the unexpected rise in claims together and you turn a $5.46 billion profit in 2007 into a loss in 2008. Should this make you worry? Well, look at it this way. The insurance industry is suddenly making a loss. Shareholders in general and the policyholders and State Farm are not happy. Senior officers of the companies want their bonuses. The for-profit companies are tempted to raise the premiums across the board to get their earnings back into profit. Except with a recession threatening to turn into a depression, that's not going to work. Make the policies unaffordable and people stop buying. That's why State Farm's just dropped its auto insurance rates in Georgia by an average of 1.5%. For the record, this means the current premiums are 12% lower than 5 years ago. Since State Farm's insures around 1/4 of all vehicles on Georgia's roads, this is a good deal. So the next time you're shopping around for a cheap car insurance policy, you may be pleasantly surprised that the premium rates from an increasing number of insurers have fallen in other states. The next bill may not be quite as painful as you fear.